Hi everyone and welcome to Talk to the Expert at property-investors.co.nz. This is Hadar Orkibi and we're going to speak soon with Mark Honeybone from MH Venture Limited. Mark is an experienced investor who has been doing joint ventures lately and is doing it very successfully. Hi Mark and welcome to this recording.
Yeah, thanks, Hadar. Pleasure to be here.
Mark, in your own word, what is a joint venture?
Simply just two parties with different expertise, so they bring different expertise to the project, coming together to achieve a common goal. For example, there's two reasons why. For me in the past, I have all the expertise and time to do the joint ventures, whether it's for me mainly renovations, subdivisions or the likes. I've negotiated a good deal, but in the recent years, for various reasons, I haven't quite had the cash to do as many as I'd like to be doing, and so I'm finding investors who have the cash, they certainly don't have the time, and in most cases don't have the expertise to do it. And that's the reason why joint ventures are there. Two people to get together, to use each other's skills, to get a good result for themselves. And that's whether you're doing a quick, like I do, renovations and selling them again, or whether you are doing a long-term strategy of keeping properties together. There's various ways you can do it.
Yes, so to summarize that in general, there are a number of options in joint venture. The two common ones is to team up with somebody that has the strengths that you lack of, meaning if somebody has a reasonable income while you have a weak income or a weak steady income and a lack of deposit, they can bring up the serviceability and the deposit and team up with you, for example, or with an experienced property investors who is great with finding great deals and managing the project. So both parties team up and work together to achieve the real estate goals. The key is to find a partner who has the strengths that you lack of, meaning, like I just mentioned, if you have weak income and if you have no deposit, you team up with somebody which will be your money partner and will bring that to the table, while you can bring your expertise, which is finding great deals and managing project, or if you are a tradesperson, you can bring that to the table as well. Especially in this marketplace, when finance is harder to get for most investors for big project, if it's property development, if it's a small or big, if it's a two-site subdivision, if it's spec housing, which is buying land, building a house to sell for a profit. Banks are a bit tight at the moment. Gone are the days of before the great financial crisis. It's much harder now. So joint venture is very common those days. Is this what you're finding in your environment at the moment as well, Mark?
Yeah, definitely. Yeah, right now, Hadar, as you're saying, right now at the moment there's finance isn't quite as available as it was 2 years ago. 4 years ago. It's getting better, I suppose. But as I said, it's not only the income. You have to have the income and you have to have the equity in your own place or other properties to be able to go forward and carry on doing things, especially for short-term projects. And that's where if you can both bring your skills to the table, have a common goal, and we work forward and make some money.
Yes, another key element for having a long-lasting relationship with joint venture is not just as a one-off grouping together to make a deal, is to find somebody and to work with somebody who for the long term they will be lacking of what you got. Meaning, I know that you're working with some investors who are based overseas. They are not here. They cannot find deals. They don't have the time to find deals, but they have great income and a reasonable deposit. So those people would like to team up with somebody like yourself, Mark, because you're actively finding deal. You're actively searching the market, you're actively managing your own project and other people's project in that aspect. So this, if you team up with somebody like that and it's successfully working, this could be a long-term relationship, and you can both grow your portfolio, whether it's a buy and hold or whether it's to buy and sell for a profit.
Yeah, absolutely, Hadar. And I've done many projects in the last few years from people from Australia, the States, Europe, Asia, I should say, and quite often you might not have the same long-term goals, and that's what I've found. But you have the same sort of short-term goal. And what I've found is some of these people, we've done some successful projects and they've moved on. But as you said, when you actually can find that person that has the exact same common goals as you do, and for a long-term, long-term ventures, whether it's you're still renovating and selling, or even just keeping property together, then you can then achieve some really exceptional results by working together with that financer and then working with you. And as I said, I'm only really talking on my sort of what I've been doing in the past. You can go into joint ventures with people 50-50. So you've both contributing money. Some might just pay the deposit and the other person pay the remainder. There's so many different options what you can do. But if you get some people who are totally on the same wavelength with you, with the same goals, you can get some exceptional results.
Yes, there are partners who team up to build a portfolio together for the long term, and they have no plans to sell or no specific immediate exit strategy. Although they always put some exit strategy in place if something changes within the personal circumstances. And there are those who go into a joint venture for the purpose of property trading, which is what I personally favor, because when I go long term, I like to be independent and not to be depending on any others for that. So that's pretty summarizing the point of who should get into joint ventures, who we see as investors ourselves who do joint ventures, who we see coming to the table and have interest in doing so. Going into joint ventures, it's something which should be looked at very seriously. There are pros and cons for it. We did discuss just now the pros. There is the obvious pros, which is you team up with somebody which has capabilities, whether it's financial capability or professional capabilities, and together you can pursue the goals and put those strengths together and pursue your goals, which is great. The cons are a bit more something which we'd look into that now. And for example, it is very important before you start your joint venture, before you sign the agreement, before you go in, is to discuss and make sure, for example, if you're dealing with the money partner, it's important to make sure that the money partner does have the funds available, whether it's in cash, whether it's a pre-approval, and also that there's enough trust there and possibility and option to communicate, to be able to act when the right deals come along to the table. Because I know, Mark, that me and you as an active property investors and traders, sometime the deals come, you get the phone call and there is a deal, and you have to put the money on the table and pursue sometime with an unconditional offer. So it is very important.
Yeah, exactly. It's all about being prepared. You have to be prepared, especially in today's market. I mean, for example, the Auckland market's so hot, you don't have a day or 2 days or a week to decide whether you're going to take a property when you get offered it. You have to be ready, right there, right now. So part of as I say, the pre-work doing is when you have got a partner is making sure they have their entity sorted, make sure they have their finances ready to go, and yeah, so there's a bit of trust there, I suppose, on the doer, on the financer side, and saying that, I suppose, back to the pros and cons there. Most of the risk factor for what I do when I'm not actually putting any money into a joint venture, I'm doing the project, buying it, selling it, doing whatever it takes to make it work. there is certainly more risk in the financer because they're putting all their money up for the project, including the buying and the renovating and the selling. So they really have to do their due diligence on you, the project manager of the project. What I always do is I get if anyone wants to do a project with me, they don't know me, I get them to talk to other people who I've done projects with, and I don't care if it's a project that's gone really smoothly, we've done better than expected, or if we've done worse than expected. What they'll get out of it, they'll see that I've got integrity, and that's really important. If the project turns a wee bit nasty, or there's just a wee hiccup during the project, you want to be able to tell the investor, where it's at straight away. You don't want it to wait a week or 2 weeks and you try to fix up a problem. The investor would like to know, straight away that there is a small problem. This is how we're going to get the solution to fix it up and move forward. So certainly the track record is very, very important, and your capability of managing a project, how you're going to report to them is also very important.
Yes.
And your integrity, obviously, again, most important. But there is a bigger risk factor on the side of the financer. If it's if it's a project where you're both putting money in, you both obviously have that risk factor with the other person. So you have to again do your due diligence on that other person.
Yes, this is very, very important. You have to make sure you're totally comfortable getting into a joint venture together. I often look into joint ventures. If I get involved, in some cases, we both bring something to the table, also in terms of financial contribution. And that's something that it could work either way. It's really a dynamic agreement which could be formed to answer the needs of both sides. It's a very, very there's no set rules in joint venture. Once you put them together and you put them on papers and you set up the rules, those are the rules which what you both agree with.